Hey everyone, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as a thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. All right, folks, we're continuing to monitor Bitcoin's chart, waiting for the continued move upward because we are moving away from that extreme oversold zone. On the daily chart, the Bitcoin bulls are in control per the MACD. It has a bullish cross. And on the weekly chart, as I've been sharing with you guys, there is a bullish divergence. So we got to let the market do its thing, but we are seeing some additional metrics that are signaling the bottom is either in or very close. Here, analyst blockchain backer shared a chart showing Bitcoin's on-chain loss and that it has hit the 10.5 million marker here. And this is where we've seen it hit in the past and it has signaled the bottom. Doesn't mean it must repeat exactly, but again, these are signals. We got a confluence of factors, the bullish divergence, the on-chain losses, the extreme oversold zone that we've been in, and much more. So we're seeing some positive signs, and this is why I've been telling you guys I've been buying and slowly dollar cost averaging in, right? Because even if it's not the exact bottom, we are certainly close to that bottom. We're in the bottom zone. So this is certainly a strong metric we need to continue to pay attention to. There's also another one someone shared here. Bitcoin has never dumped below its electrical costs. So essentially, the cost to produce or mine a Bitcoin, Bitcoin always held around that level. It never really broke down below it. And the miners do control a lot of the Bitcoin market. And I think this is just another strong factor we have to pay attention to. We can't look at these individually and say, based on this one factor, that means the bottom is in. But if you see a confluence again of these things, it's a very good sign. And, as far as the relief rally out of this correction we saw recently, the Bitcoin MVRV still hovering below the neutral line. And I'm talking about the 30-day MVRV. So it shows that traders are still underwater, even though there has been a little bit of a climb back to the neutral zone. So we want to see this go above and the price to follow suit. And obviously, as we get overheated, we'll go back down, but it's all cyclical. So that's why it's important to pay attention to this metric. It very much mirrors the RSI metric. Now, folks, we have some very crazy news. This is coming out of Illinois. I'm sure many of you saw it already. Governor Pritzker, JB Pritzker, if I'm saying that right, has signed a 0.2% tax on crypto transactions into law, including transfers between personal wallets, with the Crypto Council for Innovation calling it the most punitive digital asset tax in the country. This is straight up draconian. They want to tax crypto transactions. And the way they did this is very sneaky, guys. So apparently, this new digital asset trading tax was quietly slipped into the state budget at the last minute, and it made Illinois the first state to single out crypto for different tax treatment. So they're not doing this for any other asset class. They're just doing it for crypto. So clearly there's an agenda here. So I decided to Google who the hell is Governor JB Pritzker, right? And I figured, wait a minute, we never heard about this guy. He never really talked about crypto in the past, and he's just a governor of a state. So why the hell would he all of a sudden wake up and do this and sneak it into a bill last minute? Well, I decided to check, does he have any connection to Elizabeth Warren? Right? Well, apparently he does. And I believe Elizabeth Warren is the one who seeded this idea. I don't think this governor woke up and said, you know what, I'm going to tax crypto, right? It came from someone. The marching orders came from the big banking incumbents down to Elizabeth Warren, and then she sends it out to her cronies, right? So Illinois Governor JB Pritzker and U.S. Senator Elizabeth Warren are prominent figures in the progressive wing of the Democratic Party. They recently collaborated during a highly contested Illinois U.S. Senate primary election, where Warren and Pritzker both backed Lieutenant Governor Juliana Stratton. Now, here's some more details on that, which I think is the smoking gun here. Warren and Pritzker campaigned together in Chicago to support Stratton against a crypto-funded opponent. Warren praised Pritzker during the campaign, calling him a rare billionaire who fights from the heart. Now, notice they were going up against a crypto candidate. So, this guy didn't just come up with it. He was told by Elizabeth Warren, who we know is leading the anti or former anti crypto army with Gary Gensler and all these guys, but she's still fighting. This is why I've been saying, you got to watch out for this woman. She's got her cronies and she's going to try to go get all these people to do all these crazy stuff. Now, I believe they're going to have to roll this back because as the businesses and the revenue leave the state, you're going to see some panic. And look, a lot of people in the crypto industry came out criticizing this, rightfully so. Here's what Brian Armstrong, CEO of Coinbase, had to say. This Illinois law is remarkably bad. It will end up hurting the state, kill jobs, and push innovation out the state. Coinbase has 1,517,628 customers, aka voters, in Illinois. If you think this is bad policy, sign up with Stand With Crypto and let your representatives know. So a lot of folks did, big time breakdown of this. And again, it's singling out crypto, doesn't single out any other movement of assets or wire, bank wire, ACH, or whatever it may be. So clearly an agenda to attack crypto. And you know who it came from. Elizabeth Warren, and you know where Elizabeth Warren is getting her marching orders. Jamie Dimon and the banksters, right? We know this. So it's just some shady business. And again, snuck it in on the last minute. So pretty crazy stuff. But if this is the game they want to play, they're going to get destroyed again, just like they did in the 2024 election. Crypto is spending the money, and regardless of if it's a Democrat or Republican, if you're anti-crypto, they're going to go after you. And here's an example, folks. Crypto-backed GOP candidate wins Alabama Senate runoff with June primaries looming. So several more U.S. states are scheduled to hold primaries next week after one Republican candidate won in Alabama on Tuesday after a crypto company-backed PAC used what it called its biggest spend of the cycle. So they want to play games, they're going to get destroyed. And again, they could be Democrat or Republican because there are some Republicans who are against crypto. Now, a majority are Democrat, and I think because they're very loyal to Elizabeth Warren, and I think Elizabeth Warren hurt the Democrats big time in the 2024 elections. But anyway, these guys they're on the losing side of history. They're going to lose, and like I said, I think they're going to backtrack this because watch as the revenue and the jobs and all these things leave, and then they're going to start panicking. Now, folks, quick word from our sponsor.
This episode is brought to you by BitGo, the trusted infrastructure behind the digital asset economy. If you're serious about crypto, whether you're an investor, institution, or building in this space, you already know security, compliance, and execution are everything. And that's exactly what BitGo delivers. With over a decade of experience and 5,500 plus institutional clients across 100 plus countries, BitGo provides a full suite of services, including qualified custody, trading, staking, financing, and stablecoin infrastructure, all in one platform. Let's break it down. Want to launch crypto services fast? BitGo's crypto as a service lets banks, fintechs, and platforms go live in as little as a couple of months without dealing with complex licensing or infrastructure. If you're looking to launch a stablecoin, BitGo offers a complete stablecoin as a service platform from reserves and smart contracts to compliance, built to align with the new U.S. regulatory framework that is the Genius Act. Want to earn rewards on your crypto? BitGo runs one of the largest institutional staking platforms with tens of billions staked across 50 plus networks, all while your assets stay securely in qualified custody. Need deep liquidity and execution? Their trading platform aggregates liquidity across 30 plus venues, giving you better pricing and the ability to trade directly from custody. No pre-funding required for approved clients. And if you need capital, BitGo offers crypto-backed financing, so you can unlock liquidity without selling your assets. So here's the bottom line. BitGo is one of the first federally chartered digital asset infrastructure companies offering regulated, insured custody and a platform built for institutions, but accessible to forward-thinking players across the space. So whether you're scaling a fintech, managing a fund, or building the future of finance, BitGo gives you all the tools that you need to do this securely, compliantly, and at scale. So learn more at bitgo.com and see why the biggest players in crypto trust BitGo.
All right, moving ahead, Fidelity joins Wall Street race to manage stablecoin reserves. Just yesterday, or in yesterday's podcast, I told you guys about State Street. Now, all of a sudden, Fidelity's joining. And BlackRock, they were the ones who started this. They started custodying Circle's USDC reserves, and now all the Wall Street firms are following. So, Fidelity Investments is the latest Wall Street firm seeking a role in one of the fastest growing corners of digital assets, managing the reserves that back stablecoins. The asset manager is launching the Fidelity Reserves Digital Fund, a money market fund designed for stablecoin issuers and institutional investors under the reserve requirements established by the recently enacted Genius Act on Thursday. The launch comes just days after State Street unveiled a similar product, the State Street Stablecoin Reserves Money Market Fund, underscoring how traditional financial firms are increasingly competing for a market that could swell into the trillions of dollars if stablecoins become a larger part of the global financial system. Now, we know stablecoins will, and they're going to be launched in different currencies across the globe. Yesterday we talked about Standard Chartered partnering with China to essentially be able to be part of the network for the digital yuan, right? So it's going to be CBDCs, stablecoins, tokenized assets, and much more. So we're seeing the race kicking off here and the competition heating up, which is very good. We want to see competition, and that gives us as consumers and investors more options, more choice. So this is really, really great. Now, moving ahead, FIFA. I'm sure many of you are World Cup viewers and watchers and fans. I'm certainly watching some of the games. Well, FIFA wanted the Avalanche blockchain's help to curb World Cup ticket scalping. Here's how it's going. So we know that ticketing, entertainment, much more will be going on the blockchain. I believe NFT technology will be used. So let me give you some details here. As the 2026 FIFA World Cup unfolds across North America, one of blockchain's biggest real-world tests is happening largely behind the scenes. FIFA Collect, the federation's digital collectibles and fan platform, is using the Avalanche network and modex for its operation to power a new ticketing model designed to address some of the biggest frustrations in sports: bots, ticket fraud, and runaway secondary market prices. The system is on a customizable Avalanche Layer 1 blockchain known as the FIFA blockchain, revolves around two features for a designated number of tickets: a right to buy and a right to ticket. Neither is the ticket itself. Instead, an RTB, or right to buy, is a digital entitlement that gives fans priority access to purchase a specific ticket before it becomes publicly available, giving them another way to buy tickets. Fans can acquire RTBs through FIFA Collect and trade them on secondary markets at a market value. Once redeemed, the RTB converts into an RTT, the right to ticket, which can be used to purchase an official match ticket through FIFA's existing ticketing infrastructure. Folks, this is a great example of what's coming. Now, it may not fully function like this, but they're going to figure it out, right? This is the trial and error phase, but clearly they're going to use blockchain technology to help mitigate a lot of the legacy issues. So this is a great example of blockchain being used in the real world. And, if it's going to be used for FIFA, it's going to be used for other sporting events, concerts, music events, and much more. And I'm an Avax token holder, which is the native token of the Avalanche blockchain. So this is huge adoption for Avalanche. So let's see how the results come in. But clearly, this is going to help solve a lot of problems. And here's another example of blockchain being used. So Moody's rolls out credit ratings on Solana in tokenized asset push. Moody's, big rating institution. Solana, one of the top blockchains. I am a Sol token holder. So Moody's Ratings is rolling out its credit ratings on Solana, allowing issuers of tokenized bonds and other fixed income securities to embed the firm's assessments directly into blockchain-based assets. So the move, announced Wednesday in partnership with Solana-focused tokenization specialist Alpha Ledger, expands Moody's token integration engine to a major public blockchain after its first deployment earlier this year with the institutional-focused Canton network. Now, I'm also a Canton Network token holder, so it's great to see the tokens that I hold of the respective blockchains are getting huge adoption. I'm sure many of you hold these tokens as well. So the move builds on a pilot project completed last year when they demonstrated how municipal bond ratings could be attached directly to tokenized securities on Solana. Folks, the blockchain rails being established here for the entertainment industry, the finance industry, the ratings industry. Incredible what's being built. Very, very bullish. This is why I have the macro view on this asset class. And you got to be patient. The prices are not reflecting this news right now, but they will, guys. So we got to be patient. Now, speaking of tokenization, Binance founder CZ tweeted out today, countries need to tokenize their stocks, allowing worldwide buyers, RWA. Countries need to issue their own stablecoins to expand their currency's usage on the blockchain. I think he's right. And it's clear where the puck is heading, right? We're seeing a lot of countries are doing this, and it's all going to run on blockchain rails. The economy, the capital markets, the governments will all run on blockchain rails. Final news item here, stablecoin infrastructure firm Trace Finance raises $32 million Series A, says valuation grew 10x from the seed round. So Trace Finance is a stablecoin payments infrastructure firm, again, raising $32 million in a Series A funding round as it looks to expand across Latin America and the Asia Pacific region. So a lot of big players involved here, Coinbase Ventures, Paxos, Jump Capital, Han Ventures, the list goes on, which is pretty incredible. So Brazil-based Trace Finance began raising for equity round at the end of last summer and closed it in December. Co-founder and CEO Bernardo Brights told the block. He added that Trace's valuation has grown about 10x since its 2022 seed round valuation when it raised $4.3 million, though he declined to disclose a figure. So guys, we are seeing incredible investments in the companies building the picks and shovels, the infrastructure of the market. Folks know what's coming, right? So they're investing in this technology, and it's a very good sign to see this, right? Meaning that people see growth, they're optimistic, so they're putting their money in. Not only are they putting their money in the infrastructure companies, but also the token projects, and they're holding the tokens, right? We've talked about it over the past 6 months where BlackRock invested in Uniswap, the decentralized exchange. They have the Uni token. I believe Apollo, they invested in Morpho. And there was another one who invested in Layer Zero. I believe it was Citadel. So you're seeing big institutions holding the tokens of these respective projects, which is very bullish. So investments, capital coming in big time, and that's a very good sign. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Subscribe if you haven't as yet. Be sure to subscribe to my free email newsletter. It's 100% free. Link will be in the description. Grab a copy of my book on Amazon. It's available in paperback and digital. And if you want to expand your knowledge about crypto and learn more about blockchain technology, I have a course at mycryptocourse.com. This is a comprehensive course that teaches you everything you need to know. It features expert commentary, which no other crypto course out there offers. And right now, you can get 50% off the price of the course. We got a big bear market sale going on. Use the code BEAR, BEAR at checkout, and you can get that 50% off. So go to mycryptocourse.com to learn more. All the links will be in the description. Folks, thank you for tuning in. I appreciate you all, and I'll talk to you all later.